let's talk about one of the most common questions we get around here, and that is scalping. You hear that word scalping on the show day in and day out. Everybody wants to know, what are the keys here to scalping? We're going to focus today on some of the key and important levels that we have to find in order to place those really quick trades, guys, where we can both control our risk but also maximize the upside or profit.
Yeah, I'm glad you sort of said it there, like quick in and out, because that's what scalping is, and controlling risk. How do you find those key levels? I think you keep it as simple as possible. First, find something that's going to move. I'm going to show you a chart of pets yesterday because that was crazy. 360 all the way down into the penny stock range, but I want to highlight what it did when it settled down at the bottom here. So this is yesterday's action in pets. In the afternoon, it tried to hold 76 cents here. And then you had the top end of that range was about 80 to 81. When it finally broke that range, and then just in the aftermarket, it then put in the same aftermarket range from that 76 to 81. So you fast forward to this morning, and I'm saying to myself, I just want to play off those levels. It's 5 cents notional in scalping. Of course, it's a decent percentage because it's a penny stock, but I'm then looking for long once it breaks that 81, and then scalping out in the first 5 cents, anticipating, well, 5 cent range below, 5 cent range above. Then do the same thing again off of that range. When it starts to break below it, I take one last try at it. It can't go more than halfway, and that's when I exit when it breaks. And obviously, it would have worked one last time, but because it was putting in a smaller amount to the range here, I decided I didn't want to try to hang on to it. Let's see what happens after the open. And what it does do is just jumps right back into another range-bound trade. You come right back to that 76, 77. When it breaks, I'm then shorting it and then identifying, okay, 3 to 5 cents, because that's the range it wants to put in. Make sure you're taking profit 1, 2, 3 cents every single chance you get. What can happen when you're trading in a tight range is, hey, you might break out at that top, which is your level, that's a 77, you get out, and I never get back into it, and then it does a flush. But if you're scalping in and out, it's not always about capturing the massive goes from 70 to 54 cents or 50 cents. It's not always about capturing those. It's about the multiple executions, identifying where you can get in, knowing where your out is going to be when it eventually breaks, and then just trying to get as many trades as you can off while it's in that range. So you're taking advantage of the range. You can't worry always about the gigantic moves when you're doing those trades and scalping it. It's about taking advantage of, to me, sometimes a previously established range, which makes it very simple to structure.
Yep, and I think great talk here, and I think nailing it on the head, Brendan, to begin with, was talking about make sure you understand the price levels that you're working off of, and if you do that, then it's pretty easy. I like to use the evens, just the quarter levels, so the evens, the 25 cent, the 50 cent, 75, and then back up to even levels, right? And so I have a perfect example of me doing exactly that here on Palantir. I mean, Palantir comes down, we were waiting for 16.25, it doesn't hit, or 16 flat, and all of a sudden, as it breaks back through here above 1650, look where some of these bids are: 1659, 1656. So we're buying these bids ahead of 1650. Why? Because we're just trying to scalp these out. And remember, this is giving me an average price here of 57. Look where some of these outs are: 64. Right? That's 7 cents. So right away, taking some outs that would bring us back here to give us a risk to reward ratio of greater than 1 to 1. But when you're scalping, those are basically the ratios you're trying to look for. Can I get, if my downside here is a 50 break, and that's going to be 7 or 8 cents worth of risk, well then, I'm going to get out the majority as it pops up. I mean, most of these are 70s, 75s, 76s. So we're taking out 20 cents when we're only risking, 6 or 7 on the downside. Then when it blows up to the upside, you feel kind of bad because you don't have much on. But I'm trying to hold that 10 or so percent. Then when it drops, this is, again, another benefit of scalping. When it drops right back down, I still don't have the position on. I'm out of this position because I've scalped it out. Now I can take the bid again at the same level and, again, make that same 20, 30, 40 cents. But when you do it twice, all of this profit is double. And then this time I learned my lesson because, hey, scalping can turn into a little bit of a hold because as it pops back into some levels that we've already seen before, we still have on 10, 20, 30% on board to hold out for a little bit higher. So Brendan, not only is scalping a 1-to-1 ratio, but if you do it enough and you do it on a stock that you're familiar with, sometimes you get those bigger winners.
After that, I have nothing to add, guys. That was perfectly said. Very well done. Great points, as always, on scalping. I mean, key levels, the key to scalping. We'll leave it at that.